locally oriented groups, and that is Mr. Price. So this one, of course, is the value-oriented cash and home goods retailer. So it's got the Mr. Price Home and related sort of things, Sheet Street and that kind of thing. 37.73 billion rands worth of market cap. Price to earnings ratio 15.59. Dividend yield of 4.38. And a share price which looks a bit rough over the recent years. Let's go straight to it. You'll see sort of fake rally followed by a bad slump. So what's going on here is a combination of more competition and then the anxieties about the health and state of mind of the South African consumer, right?
Yeah, I think unfortunately this was a company that got caught up in a bit of a perfect storm. So as you say, increased competition coming in, which didn't help. And I think what took them by surprise was the aggressive discounting policies that they had that brought quality down to the price points.
Let's just recap who those competitors are. So it's Zara, but that's small. It's H&M is a bigger concern.
Cotton On are
that's another international group we're not talking about today, but that is a really big global player in that kind of fast fashion retail environment.
Correct, and they've got bigger ranges than
Cotton On, all of those kind of things. Topshop,
all of them there. So what it did is, the consumer now became spoiled for choice. At a time when Mr. Price was starting to struggle, they made one or two mistakes with their winter mix, and they didn't discount in time. They carried too much inventory,
and
all of that
sometimes
cost
that's a
them
function
money.
of weather, right? If you have a slow onset of winter or summer, that transition can be a mess for people, because then you don't have the stuff that people want suddenly.
Correct.
Tricky.
And the problem that Mr. Price, I think, is they're facing at the moment is that they obviously are big importers of garments. They want to pass on discounted prices to their consumers. With a weaker rand and potentially on a weakening trajectory, they're going to continue to struggle that. So that's going to eat into margin.
Yeah, well, look, that's tricky. I mean, 2016 was, the rand just looked like it was on one way of getting stronger and stronger and stronger all the time, and now suddenly this reversal. So that's upset investors in the shares.
Correct.
Okay, and then the downgrade, because I want to put this question to you now. What is the outlook for retail sales in this country? What is the outlook for credit extension? What are the banks going to do, given that they now face narrowed margins because of a debt downgrade?
Correct.
And are they going to extend credit? They were looking a little bit more generous, but now they're probably going to pull in the horns.
I think they will definitely pull in the horns. I mean, I think the banks will be risk averse in these type of environments. They'll concentrate on preserving their capital adequacy. So I think you're going to see less credit extension. It's going to directly impact the consumer. And we could see inflationary effects come in if we do get a persistently weaker rand.
But we know that Mr. Price is basically sort of 80% or thereabouts cash sales, so that's slightly better. They're not as exposed in terms of having to take a write-down on their own book. Some of the others we're going to talk about in a minute, like Truworths and Foschini's, actually issue a lot of credit to their own customers, and then they'll have to be more cautious. And so the question is, at a 16 or something price earnings ratio, whether the current share price prices in enough of this downside, because we know they're great. They're very good at buying. They follow global fashion trends, and then they apply them for the southern hemisphere. They've got the advantage of the seasonal shift and all of that.
Look, the stock's re-rated from a very high PE to a moderate 15 odd. I just don't know if they've displayed how they're going to get out of this soft spot at the moment, and for that I'm going to wait and see where that leads.
I think that's the right thing to do. So that's a not hot from both of us.